Morning, market chameleons, and soon to enter Dimitri Pargamanik. How you doing, Dima?
Good morning, Will. How are you?
Great. It's right at 9 o'clock, so let's get started as fast
Okay.
as we can so we can get to some of this information. We'll start with the disclaimer.
All right. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer, everyone.
Great job.
And let's get started.
What are you seeing this morning?
So let me share my screen real quick. And what I wanted to do, we'll just take a look what's going on in pre-market hours. Netflix reported earnings yesterday. You know, they're up today. I think it's like something like 13%. I'm gonna kind of focus today a little bit on Netflix. I wanted to share some insights about their report, the price reaction in the stock, and kind of stuff leading up to Netflix's earnings. I think just focusing on that and breaking down some of that analysis is going to help people going forward, you know, with earnings in other companies. So having said that, and of course, if you have any questions, Will, let me know. I'm going to try to get to as many questions as I can, you know, before the end of the show. So excellent. This is the pre-market report. Stocks moving into pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to filter out really quickly stocks, higher market cap stocks, $20 billion or higher. So top of the list, we got Netflix. So that's when I'm going to start focusing on. And then we got up 13.9% on earnings. Alibaba up 6.4%. So that's starting to make a comeback. We got TME, PDD up 5.1%, 3.9% on lower volumes, as you could see here. So overall, 43 stocks made the percentage gainers list, 9 on the percentage decliners list. From that perspective, favors a more bullish open. Let me take a look at the unfiltered report. So we got a few lower cap stocks, CLBS up 122%, 15.1 million shares. And this looks like it could be related to Netflix, but I'm not sure. Just reading the headline news up top. We got another lower cap stock, APM up 44%, and Netflix up 13.9%. So if there are no questions, I'm just to save time, I'm going to go start looking at Netflix earnings. Well, let me know if you have any questions. Okay, so let's look at Netflix leading up to the earnings report. We're going to take a look at the price reaction. Then we're going to take a look at some of the fundamentals and what they're actually reporting, you know, in their press release, what they're communicating to their investors. So I'm going to go here to Netflix and let's see what happened prior to earnings. So we see it was the stock was $501.77, trading in a pre-market $571.90. I'm going to just take a look really quickly at the implied value. This is what we had, the implied value prior to earnings. So if we took Netflix and we used their, you know, they don't really make earnings in the last 3 years. It's kind of choppy. So we're looking at their price to sales ratio. And if we use their 3-year average price to sales ratio, looks like that the stock's implied value, $504.54. Again, this is looking at the P ratios. It's all over the place. So let's just stick with the price to sales. If we compare Netflix price to sales, 9.5% versus SPY's price to sales, 2.8. Sorry, this is 9.5 ratio, 2.8. It's trading at a 246% premium to the S&P. Historically, traded at a 299% premium to the S&P. So if it reverts back to that Historical average, we're looking at $577 on Netflix. So if we just took the average of those, the average implied valuation 541, it was 501. So it was definitely trading on the low end of its historical multiples. So that's heading into earnings. So I think they were already pricing in not a great earnings, so any kind of surprise would have been very beneficial to the upside. The other observation, this heading into earnings, what I noticed is that on average, Netflix usually moves up, the average move between earnings. So from the time after reporting the first earnings to right before the next earnings, that on average, it gains 9.1%, 75% of the time it's up, 25% of the time it's lower. This time around, between earnings, it was only up 2.6%. So there's not a lot of enthusiasm, built up already. So a very good report could give it a big bounce, or down, but already not a lot built up to the upside like the rest of the market, has been going on.
Just a question from Jake real quickly. When do the chameleons get access to this fundamentals tab?
So so this fundamentals tab, you don't see everything here, but it will be more. I'm still looking and cleaning up the data. There's lots of nuances in there. But I'm hoping, that you'll start seeing some of it coming up within the next 30 days. So within the next 30 days, I'll start slowly, introducing one tool at a time.
Sounds good.
Okay. That's heading into earnings. Let's take a look now. When people do this all the time, they think that if a company, they look at what analysts are expecting. So analysts come up with these, consensus earnings per share number. And the assumption is that, well, if the company reports a number that's higher, or we say beats, the stock automatically goes up. Like it has to automatically go up. Remember, it doesn't automatically have to go up. People have to want to buy that stock and give it a higher valuation. And the assumption is the other way. Well, if earnings misses, right? Like if the earnings number is below what the consensus estimate is, then the stock has to go down. That's not the case either. It doesn't automatically just trigger a selling. Investors really want to see what's behind the number. What is the story behind the number? And that's what I'm going to kind of show you, because I think that there's this kind of misconception that if the stock beats its numbers, it's up. If it's lower, it's down. So let me just show you something really quickly. And this is basically the case across the board, wherever you look. Okay. Here's the earnings per share in Netflix. Here was the estimate. It missed, right? If I showed you this yesterday, if I showed you this yesterday, right, without letting you know what's going to happen in the stock, people automatically assume, well, the stock's going to be down. It's going to crash, right? Let me show you historically. So, it's not always the case. Look at here. January 21st, 2021, Netflix beats by 77 cents. 77 cents. It's the highest, it's ever beat. 77 cents. That's the best it's ever done. Stock's down 3.6%. Right? Misses, it's up. And this is why sometimes I emphasize when we look at the earnings calendar, pay attention to the conference calls. It's what the management says. This number, this is kind of like what Wall Street tells you, right? Beat and stuff. This is like just common thing, consensus, follow the consensus. Is it beating or not beating? But it's not this number alone. I would say just this number alone is almost meaningless unless you know the story behind that number. That's what I'm going to try to show you today. It's the full story. That's what investors and institutions are looking at. Okay. If all you're doing is looking at this, right? If that's all you're looking at, then this is what's going to happen to you, right? It's good. You see, the stock is moving in reverse. So I just wanted to make that point. You could open up almost any stock. This is not specific to Netflix. Open up any stock. And we're showing you these reports on purpose. We put the earnings effect on purpose so you could see the reaction versus its earnings beats, surprises, whatever, to show you that the story is behind the number, what the management is saying. Okay. Does that make sense what I'm telling people right now?
Yeah. Jake has some comments about this Netflix.
Yeah.
He listened. It sounds like he listened to the conference call,
Okay.
and they're no longer going to need access to the debt markets. But
Right.
In his opinion, you then have to be worried about more stock entering the market in equity raises.
Right.
FYI. He also said, he congratulated you on this fundamental and feature. He says it's awesome. But he said one thing about Netflix, and again, this is something you're going to hear if you listen to the calls, which I'm assuming Jake has been doing. It's Netflix operates huge off new subscribers. Yep. And I knew they blew that subscriber number out of the water.
Out of the water.
Yeah. So that again would be something buried in the in the information.
Exactly. That's what you're looking at. The information, what the management's telling you, they're going to tell you what's important in their business, the risks involved, competition, what they're doing. So I'm going to open it up and kind of take a look, because I can't tell you how many times people always, they'll call me, no, if they beat, the stock's going up. If they miss, it's going down. Like, well, did you check that? Did you verify that theory? And they just assume it. And it's almost, especially people just starting to get into it and haven't seen this happening over time. So let's take a look at Netflix. Why is it up, 14% today? I'm going to go here. I'm just going to go to their SEC filing, just kind of using these so you could get used to the links. We're putting these links on purpose because it's linking you to important information. You have the investor relations website. This is the SEC filing. I'm going to show you that they filed what's called an 8K, which is anything that's material, like this press release. Now notice this press release is not the actual GAAP filing, which is the 10K or 10Q, which is the official, generally accepted accounting principle filing. This is what they're communicating to you prior to that. Okay, so this isn't this official SEC, required GAAP. This is more, they're just communicating to their investors what management is seeing as important. So I'm going to look at these documents. Let's open them up. And here, what I think is the important things to look at, and I just kind of, wait a minute, did I open up the wrong one? Here, the exhibit. And this is, I opened it up really quickly this morning and just kind of took a look at it. And here's what I think is important. So here you get your revenue, and they're showing you year-over-year growth. And of course, usually they start out with like a little summary here. And Jake's right that they did add more members. They crossed 200 million paid members, which is, I guess, a big benchmark. You go 200 million. I don't know if they do it in 50 million, but they crossed that. But here's what I think is important. They're showing you year-over-year growth in revenue, right? So this is starting it's comparing 1 year's quarter to the previous year's quarter, right? These are quarterly reports. So you could see here, 30%, 27%, 24, 22. They only grew 21%, this quarter, but they're also showing you a forecast. And here's what's important, because this is how management is feeling about. So when you guys keep in mind, the analysts, that's what they're paying attention to, right? But you're getting it straight from the company. They're telling you what they believe their next quarter's revenue will be and how much it will grow. So they're looking at 23.6% growth next quarter, not this, right? So even though they missed, they're telling you they're optimistic from what they're seeing. Let's take a look at the other stuff here. Operating margins. Look at this, 8.4, 16.6, 22. Their forecast next quarter, 25%. That's the highest, we've seen it on this table. Diluted earnings per share. You can see here $1.30, $1.57, $1.59. So if you just looked at today's number, $1.19, that doesn't look so good, right? That doesn't look so good over here. Here's their forecast. Next one, $2.97. So you see where the optimism is growing, right? Not from this number. It's what it's what management is telling you and how they're feeling, what they're seeing in their business about their future outlook. Paid memberships, then you got global streaming net additions. So these are the things right now that Wall Street is reacting to. They're not reacting to this, which is a miss, right? $1.19. This is the $1.19 versus everybody expect the consensus $1.39. They're reacting to this. Not the official number, but what management sees going forward. If you go down here, they're going to start talking more about their business. Gives you a bigger breakdown. And by the way, if you're trading stocks, you have to kind of start getting used to reading these and looking for that important information. Okay. They're giving you some guidance down here. I'm not going to read through all of this. We don't have time, but I believe another thing people are reacting to, I think, is their free cash flow and operating margins. So you could see here where they're looking at 20% operating margins. So that's improving. Obviously, if your margins are improving, that's always a good thing, right? It means you're more profitable. They talk about their content over here, what people are watching. So that's just particular to their product. They talk about their competition, right? What are they doing about their competition? Because obviously you got Disney and all these other companies now coming into that space. Cash flow. So here they're telling us that this is a big one. We believe we're very close to being sustainable free cash flow positive. That's, I think, something also Wall Street's looking at, the free cash flow. I think Jake was talking about it. So that was a big thing too, playing in there. So a lot of management is communicating positive future outlook. All right. That's why we're seeing the stock up so much today, up 14%. Are there any questions? Because I don't want to stick only to Netflix today, but if there are questions, I'll address them. If not, I'm going to go back to the report.
It is amazing because what you're showing people is exactly what the professionals are doing. Like the money flowing into this aren't like individuals, right? I mean, it's like people have really taken the time to read this. Like Jake had posted a great. They basically took the call, the analyst call, and they put it on a YouTube video. And Jake posted it on the Discord group, which was very nice of him. But he was saying when he looked at it this morning, now he's in Asia, so it was like, late, early AM for us, late last night. There were only like 200 views of it. I just look now. They're still only 8,000. So there not that many people looking that deep into what is being reported.
Right. It's the people who are used to looking that deep, that are finding the true information, the real information that's important. That's what you have to get used to. But if you look at, you could look at some of the best people on Wall Street on YouTube, and maybe they have like Jake was saying, maybe 10,000 views, 20,000 views. I don't know, unless you're Warren Buffett, maybe you get a couple 100,000. But if you have like somebody who's just like saying, I know these 3 steps to making money, you have like millions, right? You use. So it's because they're marketing to you, right? The people marketing to you will get much more views. But I'm just kind of showing you here, where to go, kind of start getting used to reading it. We're going to do more fundamental as we move on, and I'm going to start introducing some more tools. I'm taking you straight. You can go here yourself. This is on the SEC website. You could go do it today. Start reading it. I'm just showing you where that information is.
Hey, D, I didn't know if it was my computer or yours, but you're sounding you have a real bad reverb right now. I don't know if you want to
You want me to jump out and jump back in?
You can jump out and jump back in. Thanks.
Okay. Yep.
While D's leaving us, listen, everyone, thanks for participating today. The chat is a real important active feature. Jake, thanks for putting the Discord out there. It is super helpful to everyone. Anytime you have any features that you want to see on the Chameleon, I know Jake is everyone on the chat is super helpful with that. Is that D coming back? D, you back in? Nope, he's still not back in. Is my sound bad as well? Can everyone hear me? Jake 44, Mike, Jen, can you hear me? Here comes Dimitri. Let's see. You back?
Yep. Can you hear me?
You sound good now. All right. We should be good to go.
Let me share my screen.
Thanks for hanging in there, everyone. A thumbs up, a subscribe if you're new. If you're new to the channel, please subscribe. That's always a big deal.
The other thing, what I'm going to show you real quick before I jump out here is you could take a look at where their cash flow is coming from, right? Is it coming from operating activities, investing activities, or financing activities? So operating activities is their business. Investing activities are their investments, and then financing activities is it coming from issuing debt, issuing stock? So that's also important. Where is their cash flow coming from? Because you can't only do it from financing activities forever, right? You need to have cash flow from your operating activities. We'll get into that more later on, but I'm just kind of scrolling through here really quickly and pointing things out on Netflix's current report. So let's move on if there are no questions. Well,
yep.
Let's take a look at what's coming up in the earnings. I'm going to take a look at the next 2 weeks. So these are stocks that are expected to report earnings in the next 2 weeks. I'm going to filter out by stocks that trade 5,000 contracts or more per day, option contracts. We got AA, that's expected to report today after the market close. As of yesterday, the straddle was implying a move of 8% in either direction. That compares to a 4-quarter average move of 6.8% and a 12-quarter average move of 5.6%. So we see that straddle is implying a move 1.3% above the 4-quarter average. We're 2.4% above the 12-quarter average. The high move on that stock, 13.3% in the last 12 quarters. UAL, that's expected to report today after the market close. Straddle, so remember straddle is buying the call, buying the put. So we're looking at magnitude of the move in either direction. That's as of yesterday's close, the implied move is 5%. That compares to a 4-quarter average actual move of 5.2% and a 12-quarter average move of 5.5%. So kind of in line there, a little bit below the 4-quarter and 12-quarter average. The high move on that stock, 11.4% in the last 12 quarters. KMI, Also today after the market close, that straddles implying a move of 3%. That compares to a 3.3% 4-quarter average move and a 2% 12-quarter average move. High move on that, 3.8% in the last 12 quarters. FCL, I believe that's fuel cell, right? The energy.
Yep.
Right, electrical equipments and parts, because I've been seeing this one popping up. So right now, that straddles implying a move of 33.7% as of yesterday's close. It's expected to report tomorrow before the market opens. That compares to a 4-quarter average move of 12.1% and a 4-quarter average move of 12.1%, 12-quarter average move of 12.5%. The high move on that is 60.2% in the last 12 quarters. Couple more tomorrow, UNP. That's implied move of 3.5% compared to a 4-quarter average move of 3.9, a 12-quarter average move of 3.5%. So basically in line with those averages. The high move in the last 12 quarters, 6.2%. IBM also tomorrow expecting the straddles implying a move of 4.3%. That compares to a 4-quarter average move of 3.3 and a 12-quarter average move of 4.9%, or 1% above the 4-quarter average, but a little bit below the 12-quarter average. High move in the last 12 quarters, 8.5%. The other big one I'm seeing, Intel. Let's just do Intel. Well, we got a bunch then coming out later, so I'll leave those up for tomorrow. Do you have any questions on the earnings, Will?
None on the earnings. Nope.
Okay. Any questions?
Well, we had Mike was asking a little bit about this General Motors. And to be honest, I don't know anything about it, but I guess they're partnering with something with Microsoft. Stock was up yesterday. It's up again this morning. He was wondering if there was anything showing up in the trade ideas on the bullish side.
Okay. So take a look at trade ideas. Let's take a look at,
or by edge, whatever, however you want to look at it.
Well, let's take a look at bull put spreads. See, so if we had 4 of them that popped up. So here we'll take a look at the first one. It's looking at the February 19th expiration, selling the 52 put, buying the 49 put for dollar credit. We think it's worth theoretically 12 cents. That's giving you a 44% theoretical edge and a historical probability of success 96%.
Now, this was obviously based on yesterday's number. The market's now again up in the pre-market.
Right. Yeah. So the options market didn't open right now. So this is based on yesterday's closing prices. So also looking at, let me see a different expiration. These are all Feb 19th. Here's Feb 5 expiration, selling the 52 put, buying the 47.5 put, 9 for 92-cent credit. We think theoretically it's worth 6 cents. That's a theoretical edge of 24% with a historical probability of success 99%. Let me just take a look. I think they're coming. Are they coming out with earnings soon? So this could.
Well, I am sure they are.
I'll take a look. Let me see. Let's go to the investor relations website because we didn't pick it up yet. But one way to check is go to investor relations website, click on events. So right now they're just showing past events. They're not showing any upcoming yet. Right. But that's where you want to check. If you want to make sure, hey, are they coming up with any type of conference events, anything that get earnings, anything?
Yeah, you can also check the earnings history to get a rough idea of
where
it may play.
Yeah, that's where this estimate's coming from, like based on historical release dates. So they did give us guidance January 5th, it looks like. These were the historical earnings. But we're right up against the bell, Will, if you have any last questions.
Awesome job, Dima. Great job dealing with technical difficulties today. We haven't had a situation like that in a while. You held it like a professional, a true YouTube professional, which was great. Thanks so much for joining us, everyone. Dima, great job.
Thanks, everyone. Stay safe. Have a good trading day and hope to see you guys tomorrow.